Understanding Personal Financial Statements, a complete guide. A personal financial statement, PFS, is an essential document that provides a detailed snapshot of an individual's financial standing at a given point in time. Often presented in a document or spreadsheet format, this statement serves not only as a record of one's current financial position but also as a powerful tool for managing personal finances. In this article, we will explore the components of a personal financial statement, its significance, and how to effectively use it to track progress towards financial goals. What is a personal financial statement? At its core, a personal financial statement delineates an individual or couple's assets and liabilities. An asset refers to anything of value that a person owns, while liabilities represent outstanding debts or obligations. Key components of a personal financial statement: personal information, name, address, and other general identification information. Assets, a comprehensive list detailing all valuable possessions, such as cash and cash equivalents, checking and savings accounts. Investments, stocks, bonds, mutual funds. Real estate properties, homes, rental properties. Personal items of value, collectibles, art, and jewelry. Liabilities, any outstanding debts that may include mortgages, personal loans, credit card debts, student loans, any jointly held debts. Calculating net worth. One of the most crucial metrics derived from a personal financial statement is an individual's net worth, which is calculated by subtracting total liabilities from total assets. Net worth equals total assets, total liabilities. A positive net worth indicates that an individual has more assets than liabilities, while a negative net worth signals the opposite. Being proactive and regularly updating a personal financial statement allows individuals to monitor fluctuations in their net worth over time. Importance of a personal financial statement. A personal financial statement is a valuable asset for several reasons. 1. Tracking financial health. Regularly updating this document allows individuals to see how their financial situation improves or worsens over time, enabling informed decision-making regarding saving, investing, or cutting expenses. 2. Setting financial goals. By understanding current assets and liabilities, individuals can set realistic financial goals, whether that means saving for retirement, buying a home, or paying off debt. 3. Applying for credit. Lenders often require a personal financial statement when applying for loans, mortgages, or credit cards. The statement provides them with a clear picture of the applicant's financial position. 4. Financial planning. Personal financial statements can also serve as a basis for more extensive financial planning strategies, including estate planning and tax preparation. Special considerations. Income and expense statements. While relevant for understanding one's financial position, income and expense reports are typically included as an additional or separate document. These reports provide a breakdown of monthly or yearly income and expenditures, ultimately allowing individuals to create a comprehensive picture of their financial well-being. Exclusions from personal financial statements. Certain items are usually excluded from personal financial statements. Business-related assets and liabilities. Personal guarantees for business loans are included, but business assets generally remain excluded unless personal responsibility is established. Rented items. Rentals are not considered assets since they are not owned, although owned property let out to tenants is included. Personal property. Basic household goods like furniture are typically not included unless their value can be substantiated. Example illustration: River's personal financial statement. Let's consider an example to better understand how a personal financial statement functions. Assume we have an individual named River who is actively tracking their financial progress towards retirement. River's financial breakdown. Assets. Car, $20,000. House, $200,000. Investments, $300,000. Cash and equivalents, $50,000. Collectible stamps and art, $20,000. Total assets, $590,000. Liabilities. Car loan, $5,000. Mortgage, $50,000. Co-signed loan for a daughter, $10,000. Total liabilities, $65,000. Using this breakdown, River's net worth would be calculated as follows. Net worth equals total assets, $590,000, total liabilities, $65,000, equals $525,000. Although River primarily updates their personal financial statement to monitor their financial health, this information becomes invaluable if they decide to pursue any future credit opportunities. Conclusion. A personal financial statement is not just a snapshot of financial health, it is a dynamic tool that can help individuals make informed decisions about their finances, plan for the future, and apply for credit with confidence. By understanding and utilizing a personal financial statement effectively, individuals can navigate their financial journeys more successfully while working towards their personal and professional goals. Regular updates and careful tracking will pave the way for a brighter financial future.